handed down on Tuesday night. My name is Peter Lacandro, the Managing Partner of Chan and Naylor down here in Melbourne. I hope that you're all safe and well, remaining positive and getting through this situation that we currently find ourselves in. It's certainly far from ideal for so many. We're all learning every day, all of us at Chan and Naylor, from all the different government announcements, both federally and across various states and territories. And we're doing our best to relay all this information across to you all, whether it be via email, newsletters, conversations we're having with you, social media, text, and even webinars like these ones. We're certainly in weird and crazy times, and we know who knows what the future will bring, but together we'll get through all this. The team at Chan and Naylor in Melbourne are here to help you in areas needed, both today, tomorrow, and in the future. And please just ask and we'll do our best to help. Let's get stuck into it all. Okay, so stage 4 lockdown here in Victoria. It's certainly been long and extended, and our offices are currently closed. We have the team though working from home. Obviously no face-to-face meetings. Not sure when that will change. We'll leave it up to our Premier to let us know. Certainly jealous watching all the other states and territories across Australia enjoying some freedoms that we currently don't have. Like many other businesses, we've certainly created and used a lot of new technology to help us get through these times. And we'll certainly keep you updated when things change, and whether it be with technology or the ability to get the team back into the office and open our doors again. We can't wait. All right, before we get stuck into the webinar on the federal budget, I must give you a disclaimer or a bit of a general advice notice. This webinar has not been designed for your particular situation or taking into account your circumstances. Please, this is just general only. If required, you need to seek out the appropriate advice from your experts where needed. And if it helps, we are certainly more than happy to talk to you further about your particular situation. Okay, let's get stuck into the webinar. So we had a federal budget on Tuesday night. That's been postponed for about 6 months. They normally happen about May every year. It's fantastic to have over 600 clients and prospects that have registered for the 2 webinars today and tomorrow and listen in, and hopefully we'll go a long way towards explaining what was popped down the other night and answering a few of those questions and doubts that you may have. I'll certainly cover the highlights of the federal budget. We'll look at what the proposed changes are for all of us as individuals. There's many changes proposed for corporate entities and incentives for businesses. How these changes may affect your superannuation. We'll look at social security changes and other tax measures mentioned also. I'll give a quick spiel on the economic outlook for the year ahead and into next year, and then a bit of a tip on what to do next. If anyone has any questions, feel free to use the comments tab, and providing we have some time at the end, I'll certainly do my best to answer them all. Also, a recording of this webinar is happening, and that, along with the copy of the PDF slides, will be popped onto our website at the conclusion of this webinar, so you can access down the track where needed. All right, let's have a look at some of the highlights. So basically, this budget was all designed by the federal government as its economic response to COVID. In the form, it did actually begin 6 months ago. We had the original JobKeeper and JobSeeker schemes. We had things like cash flow boosts. And we also had our various states and territories giving various bits of relief as well. This year's budget, though, is going to result in a deficit of over $213 billion, with further budget deficits expected right through to 2030. That's basically going to be a lot of debt, estimated to be over $1 trillion by 2030, which will need to be paid by future generations. My children, your children, and probably our grandchildren, and we can probably keep going. This budget has actually been designed by the federal government as an economic recovery plan. It's all about jobs, and even more jobs. The federal government's basically using the assumption that if they drive jobs and employment both across small, medium and large businesses, it will help the economy recover faster. And their plans basically intends to grow the economy, create jobs, and hopefully secure Australia's future. What's in it for you and I? There's tax cuts for individuals and businesses, plenty of business incentives designed to retrain and employ staff, superannuation changes, along with a few social security changes as well. We'll cover a lot of this in the upcoming slides coming forward. It's important to note, however, that the budget are announcements only at this point. They have not been ratified by the two houses up in Canberra, so it is not legislation. Obviously, it hopefully will be over the coming weeks. Okay, let's get stuck into it with some individuals. What's happened there? So, great news. Basically, there's been some tax cuts. So in last year's budget, the government proposed some tax cuts to actually come into effect in 2022, I think it is off the top of my head. They've brought it forward 2 years. So there's going to be some tax cuts for the 19% bracket and the 32.5% bracket, which I'll highlight a bit further. And also some increases to low income tax offsets. There was also a planned removal of the low and middle income tax offset. That's been scrapped for 1 year. Let's have a look at these tax cuts a bit further for you. So basically speaking, if I highlight my little pointer here, these are the current tax brackets, or they were proposed as they stand today. So anyone earning from $0 to $18,200, we all pay 0% in tax. Anyone from currently 18 up to about 37,000, our tax rate is 19%. Now the great news is this 37 is being lifted to $45,000. And then we have the old bracket again from 37 to 90 is at 32.5%. That bracket is being increased to 45 and will blow out to now $120,000. So this basically brackets the two middle ones, for example, are where the savings are going to be. And that's generally for low to income middle earners. Now, the tax savings for someone that has a taxable income on about $40,000, so they will slot into this bracket, it's going to be about $580 for the coming financial year. All this is also proposed to be backdated to the 1st of July this year. Like I said, it needs to get through Parliament. Labor have given every indication that they're going to back these changes. Those earning basically about $60,000 a year, you're looking at savings of nearly $1,100. So that's going to give you about $20 a week in your pocket extra. Those earning, or the biggest winners from this, those earning an income between 120 up to about 190,000 will actually get maximum savings because they're basically earning more, so they're getting more of this tax benefit. That's going to equal about $3,500 a year. So it's assumed by the government that these changes will provide obviously immediate tax relief to individuals like you and I, and they're going to support the economic recovery by spending it. and by boosting jobs through consumption. So that's the idea behind the government. So some welcome relief for us as individuals, or anyone certainly in between these two brackets that are going to take advantage of things. There's also some proposed changes coming by the government in the future, in about another 2 years, where this middle bracket will actually drop out. So we won't cover that now because it's still 2 or 3 years away. All right, some other tax relief for individuals, and it's all designed around granny flat arrangements. So many build granny flats out the back on behalf of their elderly parents or family members, even friends. So it's designed here to obviously keep family living at home longer rather than in aged care, with everything that's happened there, especially down in Victoria. So it's targeted a capital gains tax exemption for granny flat arrangements. Capital gains will not apply in these certain circumstances where there's a formal agreement written in place for older Australians, or even for those in disabilities. This exemption will obviously only apply to arrangements entered into family relationships or other personal ties. It will not relate to commercial rental arrangements where you may have that set up at home. And it's due to kick in on the 1st of July next year, 2021, obviously subject to the passing of legislation. That's it on the individual side. There wasn't too many changes there apart from the tax cuts and the granny flat adjustments. Let's get stuck into the big area, which is business incentives and also corporate entity updates. And as previously I mentioned, the federal government is targeting businesses and really trying to pour money in to help with this recovery plan. It's all about jobs, more jobs, and even more jobs. That's what they're trying to do, reskill everyone. And the objective by the government is to drive jobs and employment, and this will ultimately help the economy recover quicker and faster and get back onto track where it should be. So let's go through each of them a bit more thoroughly. So the first one, which will affect some of you out there, is what's referred to as the temporary loss carryback provisions for corporate entities. And this will be basically eligible for companies with a turnover of up to $5 billion. And it'll be where you're able to offset your tax losses against prior year taxed profits to generate an immediate refund. So under this measure, losses incurred in the financial year, either right now, so the 2020 year that we're working on for you, that next year, so the financial year ending June 21 and June 2022, they may be basically, if there's losses incurred, you will be able to offset or carry back those profits that you made last year and offset these losses against it. So that'll basically be those eligible companies will be able to elect to receive a tax refund when they lodge this year's tax return, even though they may have paid tax last year. So you'll get some of that back. The tax loss, though, cannot exceed the prior year taxed profits. So if your loss for this current year is going to be far greater than what your profit was last year, then you cannot exceed that for obvious reasons. Currently, companies are required to carry forward losses and offset them against future taxable profits. Companies that are happy not to elect this arrangement, then they'll still be okay and they'll continue or can continue to carry forward losses as normal. So basically speaking, they're trying to look at, is there companies that are going to make a loss this year or next year, even the year after for 2022 because of COVID? Let's give them a bit of assistance by allowing them to offset that against their previous year's profit back in the 18-19 year. So that's what they're looking at there to help businesses. Obviously available for companies and up to $5 billion in turnover. Right, this is the big one that caught certainly many of our clients' eyes and certainly enabled a lot of phone calls and inquiries. The full expensing of eligible assets. So basically the full cost of an eligible asset that is acquired after 7:30 on Tuesday night, being budget night, and first used or installed ready for use by 30th of June 2022 may be fully tax deductible. This deduction will be available for businesses, again with an aggregated turnover of up to $5 billion. So really a lot of companies out there. The full expense will be able to be offset in the income year. The eligible asset is first used or installed. An outright deduction will also be available for cost of improvements to existing eligible depreciation assets during this period as well. So they're basically allowing the asset, if it's new depreciable asset, unless the taxpayer will go to small and medium businesses in a moment, but they'll have some special rules, but they'll basically be able to write off equipment up front. And obviously here, the government's encouraging businesses to spend money on equipment and help them build for the future, for future growth. This may include equipment that a bakery requires. It could be medical equipment, perhaps in a doctor's or dental surgery. It could be the local carpenter or tradie spending some money on some major equipment, or even that brand new trailer or ute that they need to carry all their tools in. So quite a lucrative offer there. Okay, next bit. We've heard of job seeker, we've heard of job keeper, now welcome to job maker. So we have another one in this category, and this is where a lot of all the upcoming rules will basically fall. So small businesses using simplified depreciation pools, so they were introduced a few years back, can deduct the entire balance of the pool at the end of the income year while full expensing applies. This basically effectively means that the small business depreciation pools that you have sitting there, we can access a full write-off of these pools. What is a small business? It's anyone with turnover of up to $50 million. So basically what that means is many of you out there that are running small businesses, you maybe have a depreciation schedule where there's some plant and equipment, could be that ute or a motor vehicle that you're driving, could be an office fit out. There's many, many things in there. Basically, we will have the ability, providing that you satisfy the criteria, to write all that off in one foul swoop. So it means you won't have to do it over a number of years. The effective life of the asset will be able to decrease your taxable income pretty quickly. Under the job maker rule as well, there's an instant asset write-off for companies with a turnover between 50 mil to 500 mil. So remember, the previous slide was just for small businesses up to $50 million. This is the next category. Okay, so basically what we can do right now is we have the ability to write off $150,000 worth of assets that you purchased. That ceased on the 30th of June, but now has been extended for these particular companies for a further 6 months up until the 31st of December this year. So again, these businesses will now be afforded an extra 6 months to purchase equipment, to basically and enable them to write it off, with the hope that they spend money out there, and that will help grow their business and allow that money to be reinvested in their business to help growth. So pretty welcome incentive. The one thing that the government are assuming here is a lot of these businesses still have plenty of money to spend. Probably depend upon where you were before COVID introduced, whether that's actually the case. Bit of an accounting tip though. I want you all to be very, very careful. These rules sound fantastic, that if you spend money, you're going to get an immediate tax deduction. So great depreciation claim now, less taxable income, which equals less taxes to pay. Be very, very careful though, because one day down the track, we could have future taxable income and possible GST implications arising. What would an example of that be? Well, if you're purchasing plant and equipment now, perhaps that tradie that's getting that ute or that motor vehicle, if you like, all these will be written off with obviously a value of 0. One day you may trade that ute in, and the car yard, or you may sell it privately, you may get $20,000 for it. That will then represent income because you've claimed a whole tax deduction for it. So be very, very careful. This is just a timing issue. It's not an outright deduction that you will never have to pay back. So certainly worth getting some advice here with your trusted advisor before you proceed in any of this regard, just to understand what the effect will be today and what the effect could possibly be in the future to you and your business as well. The other big arrangement under JobMaker is the hiring credit for employers creating new jobs. So basically here, eligible employers can claim JobMaker hiring credit for each additional new job they create for an eligible employee, and we'll go through what an eligible employee is in a moment, from the 7th of October 2020 for basically 12 months through to next year, okay? The JobMaker hiring credit, it'll be available from the date of employment and for up to 12 months. And it'll be capped at an amount of $10,400 per additional new position created. Employers or eligible employers will receive $200 per week if that new team member is aged between 16 to 29, or $100 per week if they hire an eligible employee between the ages of 30 to 35. There are some specific additional criteria here that you need to meet as an eligible employer. Basically, you need to show different things. So please, it's not just a blanket approach. Again, I would highly stress getting some advice from the tax professionals, okay? Other employer eligibility criteria, you'll need to be registered for pay-as-you-go withholding, and you will have no choice, which you all should be doing now anyway, reporting through single touch payroll. Employers, though, will not need to satisfy any fall in turnover tests here. And basically, that'll also be available to, it will not be available to employers that are not claiming JobKeeper. So like I said, there's a few conditions with this one. The employer, or sorry, the new team member will need to work for at least 20 plus hours per week. And like I said, you have 12 months to do this. It'll be claimed quarterly in arrears from the ATO, but just to re-emphasize, there's a lot of fine print with this one. So please speak to your accountant first. So with this one, just to summarize it in a little bit of an easier format, if you hire or if your business hires an eligible employee between 16 and 29, then you will receive $200 per week up to a maximum of 12 months worth, or $10,400. If the employee is basically between 30 to 35, then it'll be $100 per week, or $5,200 as it's capped at. Lot of feedback with this one from the media and from the opposition or those in politics, that there's no support for anyone or no incentive to hire those that are older than 35. Again, the government's answer to this one is they're trying to promote businesses to hire youth, because they believe they're the ones that have lost more jobs than anyone else out there. Okay, job maker, apprenticeship, wage subsidy. So this is again another thing. This was actually introduced back in July this year, and it'll be basically expanded further to help those businesses claim an amount where they're hiring apprentices. So these eligible businesses that employ apprentices or trainees will be eligible to receive 50% of a wage subsidy, up to $7,000 per quarter, and this has been capped at 100,000 places. So this basically extra addition, or the new measure, it will apply from the 5th of October this year for again 12 months to the end of September next year. So it's just further enhancing basically some updates that were done back in July. Okay, some good news, especially for those in Victoria, COVID-19 business support grants. So as we all know, Victoria at the moment is in a little bit of a mess, and we're certainly still in stage 4 lockdowns. Yes, it's costing all taxpayers money every day. No matter where you reside, it's costing the country, and the federal government estimated in the budget the other evening that it's added an extra $14 billion to the bottom line deficit, and continues to grow each week that we remain in lockdown. Some good news though, finally, for businesses that are eligible for this payment, and when finally the payments will come through. The Victorian government announced on the 13th of September some small government grants for small and medium businesses will be made non-assessable and exempt from income tax purposes. Please, this is in Victoria only. For those of you that are in other states and territories, you will need to check with your appropriate state government authorities to see if this applies as well. So, and this will be in Victoria for any grants from the 13th of September through to the 30th of June next year. Like I said, there's some small relief for small business or small and medium businesses in Victoria. Okay, so that's a lot of the general information to do with businesses and also corporate entities out there. So you can see it was all about driving jobs, about trying to invest back into businesses and to encourage for future growth. Let's have a look at superannuation. Now, there was basically some earlier things this year where there was some early access granted for super. So where you could meet the eligibility criteria, you were able to gain access to $10,000 before the 30th of June from your super fund, and after June or from July onwards, a further $10,000. Generally speaking, self-managed super funds were spared in this year's budget, and that's probably a positive thing considering all the changes that have happened for over the last 10 years. It helps give some confidence to those out there that are running self-managed super funds that their goals and plans that they have in place can continue to be met. There was a little bit of criticism though in accordance with superannuation, mainly from self-funded retirees that believe they've been forgotten in this year's budget. They were hoping for some tax relief. or early release of monies without triggering other laws, but they've basically believed that they've been forgotten somewhat. Let's have a look at a bit of super. There is one thing that the government did put in the fine print of the budget, but it hasn't, we don't really have any further information, that by July 2021, for self-managed super funds, all trustees will be required to comply with a new duty to act in the best financial interests of its members. So it was basically written there that trustees must demonstrate a reasonable basis to support their actions or their investments as being consistent with their best financial interests. Now, what does all this mean? Time will tell. We simply don't have any further details, but it's probably them just trying to crack down to ensure that those that are running their own self-managed super aren't withdrawing the money when they shouldn't. What investments are they investing in, and can they be held to account in that regard? Again, this is a wait and see thing, and as soon as there's more information, we'll certainly let you all know. It's not due to kick in until July next year. Okay, superannuation, there were some changes though the other night around a lot of retail and industry funds out there. So moving forward, by July 2021, if an employee basically, their super fund will be stapled to a member. So basically speaking, if an employee does not nominate an account where their super is to be paid when they start a new job, employers will pay super contributions to their existing fund. Some extra red tape for employers: you will need to search and find out the existing super fund from the ATO. So it's assumed that all these details will be linked to your employee's account through the ATO. That's probably going to be one massive job for the ATO to compile all that information, especially when I see out there that there's many, especially of the younger age group, that have more than one super fund. So what will happen there? Again, time will tell. If an employee does not have an existing super account and does not elect a fund that they want an employer to pay to, then there'll be a nominated default fund to elect to choose. So what they're trying to do is streamline where we all only have one super account, rather than pay multiple fees and for your super funds on those smaller ones to get eaten away by charges. Right, they're also planning on introducing what they refer to as a Your Super. This is designed, it's a brand new website, and it's designed to ensure or help individuals to decide on the best superannuation products out there to meet their goals and objectives or their needs. So by July 2021, Your Super online tool it'll provide basically a table of simple super products, and it'll be ranked by fees and investment returns. So all the different super funds out there. They're going to link it back to various superannuation websites where individuals can choose what they'll refer to as My Super product. And like I said, it'll prompt individuals with multiple accounts to consider putting it all under one umbrella to consolidate them all. That's something that probably would be a tip that those with multiple super funds, unless there's a valid reason otherwise, to certainly pop them all together. All right. Bit more changes with super. So like I said, or more to do with this superannuation side of Your Super. From July 2021, APRA, so they're the governing body of all super products across Australia, will be conducting benchmarking tests on the net investment performance of super funds. So basically they're trying to benchmark which supers are great, which are somewhere in the middle, and they're not so great. So they're trying to give all of us Australians out there a one-stop shop to tell us which super to perform. Unfortunately, the negative to this, and again, this was buried in the fine detail, this initiative will be funded through an increase in charges and levies on various super institutions. So what does that mean? Probably means you and I will pay for it anyway, because I'm sure the super funds are not going to absorb that just for the love of it, if you like. Okay. Also part of that APRA performance analysis, underperforming funds will basically be listed there and banned for people to invest in until their performance improves. So basically speaking, that's the big stick that they're waving to super funds to make sure that they're doing the right thing. Again, time will tell in that regard to see how they're going. Now, prior to the budget also, there was some speculation around that the government may consider delaying legislated super guarantee rate increases that were previously announced in the interest of promoting spending and jobs in businesses. This budget, great news for a lot of Australians out there, did not announce or change any of these timing increases. So just for all your employers out there, the super guarantee charge is currently at 9.5%. From the 1st of July 2021, it's due to increase to 10% on all ordinary times earnings. And thereafter, every year, it will grow a further 0.5% per annum from the 1st of July 2022 until it reaches 12% due on the 1st of July 2025. So again, there was some speculation out there. What will this mean for businesses with these extra payroll costs? Will it promote or put a negative against hiring new team members? Also, the big speculation is that will mean your state taxes, such as work covers, such as payroll taxes, etc., will also increase. So I'd probably say hold your breath there and let's see what happens in the future with all that type of stuff. So that's a little bit about superannuation and probably covers that side of things. I'm just wary of time, so I'm going to keep slipping through the slides. Social Security, that was kept pretty simple, if you like, but the good news is that they have, back in April 2020, all those eligible received a once-off payment of $750, and then in July 2020, they also received $750. There were age pensioners, those on disability support pensions, carers payments, concession card holders were just a few that should have received this payment. It was announced in the federal budget, November 2020. We'll have a further $250 that will be received by eligible recipients. And then next year, from February onwards, there'll be another $250 coming their way to support our older Australians. These payments will not be taxable and will not count as income when they're assessing whether you qualify or not. So that's also some good news there for the older Australians. There is a thing out there called a pandemic leave disaster payment. So this is a once-off payment of $1,500 will be made to eligible employers in states. And this is designed to assist individuals who are unable to work and earn an income while under the direction to self-isolate, quarantine, or have to care for someone that's tested positive with COVID-19. Which states are involved at the moment? New South Wales, Tassie, Victoria and WA. But please, please click on this website, because again, there is a lot of fine print around this area. And there's a link to the Centrelink website and under this pandemic leave disaster payment, and get more information to see if that's something that your clients or yourself could take advantage of. That was pretty much it with Social Security. There were a few other tax measures that we'll quickly go through. Fbt exemptions was one of them. So currently, employers that are providing training that's not sufficiently connected to their current employment could possibly be subject to fringe benefits tax. So that's maybe where myself as an accountant is training to be a doctor. It has nothing to do with my current employment, so that would be subject to FBT. Basically, they're looking at changing these laws to try and encourage people to get re-skilled or retrained, and they're looking at exempting this from FBT. Again, it's not legislated yet, but they are looking at that. For all of you employers out there, you also know that a lot of the FBT recording requirements are quite onerous and quite onerous, and we need to create a lot of additional records. The ATO or the government has also announced that they're allowing or looking at changing a lot of those record keeping requirements. Not until April next year, which is when the new FBT year starts, to basically get rid of some of these existing requirements and for clients to use alternate records which would give the same information. So I think that would be a positive as well. Deductions for retraining. So this is more for individuals out there. Currently, there is a ability for self-education expenses to be claimed on your individual tax return, providing there is a link between your current employment and the education that you're doing. Again, the government is considering at this point releasing some of those links that are required to help people retrain and get re-skilled in the hope that they can get a new job, or certainly before they commence, given the ability to get further work, if you like. So I think, again, let's stay tuned for more information on that one. COVID-19, waiver of import duties. So again, for certain hygiene or medical products used to treat or prevent or diagnose COVID-19, the government has waived a lot of the import duties to make it simpler and cheaper. So they've extended that through to the 31st of December this year. That may include things like face masks and gloves and disinfectant, etc. So again, if any of you are importing those type of things, it's probably worth double checking around the import duties that you're paying. There were also some insolvency reforms. So basically the government will introduce a lot of insolvency forms to support small businesses, and they'll basically kick in at 2021. The introduction of these reforms to eligible incorporated small businesses, basically those with liabilities of less than $1 million, it's designed to help them restructure their debt, make the liquidation process a lot easier and a lot cheaper and faster, and also to support the insolvency sector, so the professionals out there that do this, to get rid of some of the paperwork and all the things that they need to do. They're trying to reform all this simply because the number of businesses in financial distress has increased and will continue to increase. And they're trying to make it a far easier and cleaner process without too much stress on the overall system. Some other measures, we won't go into these too much details, but they've mentioned major road and infrastructure spending across all states and territories, increases to the first home deposit grant to help those wanting to build their first home. We quickly mentioned, but there are other changes for new apprentices and the wage support you can get. There was a bit of money poured into mental health, which many believe it's certainly skyrocketing and will continue to do so with everyone's mental health. And there was some money poured into aged care as well. All of this was done with the intention of creating activity, creating additional jobs out there, boosting productivity, and hopefully delivering long-term benefits for Australians as well. So that's a lot of the budget changes. One thing I did want to mention was, please be careful. The ATO and government have spent a hell of a lot of money over the last 6 months, and they will continue to do so in the years to come. They are promoting and they will investigate and prosecute those that are doing the wrong things. There are, for example, JobKeeper. They've already told us agents there's over 15,000 businesses plus that have claimed JobKeeper illegally. And they'll be basically looking at that and getting their money back where they possibly can. So don't just go for it if you don't meet the various criteria with a lot of it. Please be sure that you're doing the right thing, because the ATO are watching. You and I are trained to do their job, or our job, I should say. The ATO are also designed or trained to be investigators and to do their job as well. So I believe that questions and reviews and audits will only continue, especially for those of you out there that haven't got your tax returns up to date, maybe owe the ATO money, or haven't got your BASs up to date. I'd be getting onto that very, very quickly. Okay, just in wrapping up, economic outlook. So, whoops, sorry, my apologies. Bit of trigger happiness. Economic outlook. So we certainly find ourselves in some crazy times at the moment. Who could have predicted this back in February, March? What has happened this year? The biggest question mark that I have is, what does the future hold? Not just as individuals, but businesses, as a country, etc. It's certainly been difficult over the last 6 months. I believe with the support of the government in things like JobKeeper, JobSeeker, cash flow boosts, state deferrals of payroll taxes, etc. It's generally worked, and it's bought us as a nation time. It's kept Australians in jobs, it's helped many businesses stay afloat, and it's ensured families out there have some cash flow to pay bills and mortgages and school fees. Got to remember though, there's a lot of people out there that have put on hold their rental payments or mortgages and loans that they have. A lot of them are now going to start expiring, and 2021 is going to be a very interesting year for many different reasons. It's going to be very interesting to see what happens when JobKeeper ceases for many. When bank loans and mortgages need to get repaid or recommence, not only do they have to make the payment that they should have, but they need to catch up on the stuff that's been deferred. There'll be many on the unemployment line, and we know that the unemployment rate is certainly at high levels we haven't seen since 30 years ago in the early 90s. So it's going to be very, very interesting. The one tip that I would say is that cash is king. The more you can create a buffer, whether it be personally or in your business, the more when things, whether they're expected or unexpected, arise, the better position you will be able to be to get through it. So the old adage of cash is king is certainly important and certainly right here and now, and will continue to be in the near future. So that's the one tip that I would give you. But I think next year is going to be so different for many different reasons, and time will tell of what happens. I'm quickly going to mention there's no time like the present, or more importantly, what does financially sorted mean to you? And what should you be doing next, basically? Perhaps it's being able to do what you want or when you want or in a manner that you want. So what should you be doing to get financially sorted and to help you achieve your goals and objectives? What effect has COVID had on your superannuation, on your insurances? Do you have enough insurances along with your investments? So there is no time like the present to certainly look at your wealth, and financial planning becomes more important. Contact Daz in our office if we can help at all. Certainly happy to have a chat. But the objective with all of you out there right now, get yourself financially sorted, whatever that means to you. Another quick tip of what we can do next. I think it's time to keep the banks honest. It's probably a long time ago, to be honest. The banks are out there and they're hungry for new clients. If your loan doesn't start with a 2, then you're probably paying too much. There's even talk, it didn't happen on Tuesday when the Reserve Bank met, but there is talk that they're going to drop further in the future. How low can they go? But please dig out your loans, whether they're commercial, residential, car loans, credit card debt, whatever it may be. If we can help, again, we have Lucy in our office that can assist in that regard, and it's basically, there's her contact details. So feel free to reach out. But again, keep the banks honest. I can't stress that anymore. They're not going to send you a credit card, Christmas card at the end of the year because you've been such a good client and paid them too much money. Keep it in your pocket, not the bank's pocket. For those of you, probably especially in Victoria, but also across the country, we did have last week a webinar for JobKeeper in the extended or version 2 of it. If you want to get further information, jump onto our website, and that's there's under resources is a webinar tab, and you can basically watch the webinar or even download the slides where it'll help maybe address many of the questions. And this is also where shortly after this presentation, we'll upload these slides and a recording of the presentation, and that's where you'll be able to access it also if you just want to go back and have a listen to anything as well. Okay, website. Thank you for those that jump onto our website and download all our brochures and occupation guides and use our different resources there. It's there for you to use. It's there for you to build your knowledge. You know, we have plenty of fact sheets on budgets and government grants, on superannuation, on property, etc. Get on there. There's the web address listed. And go for your life. Download, read, educate yourself. We also have a section for occupation guides to help you understand what's tax deductible to you. So whether you're a truck driver or a bus driver, you could be a cleaner or a teacher, police, ambulance, whatever your occupation is, there'll be a guide there for you. There's over 30 there, and that should give you a hell of a lot more information to support you and to ensure that your refund is as legally as possible, the biggest that it could be. What to do next? There's 2 simple things. So our focus here at Chan and Naylor in Melbourne It's all about educating our clients. So we will continue to send you newsletters, webinars, marketing informations. Our job is to talk to you. What should your focus be? We've spoken about financial planning. We've spoken about banks. Hopefully now I've given you a lot more information about the budget, and there's one or two things there you can take advantage of. Your job is to invest in yourself. Read books, speak to the right people, surround yourself with the appropriate professionals that you need, attend webinars, seminars, look for opportunities. Very, very important, because no one will knock on your door. You need to take action yourself. One question for those of you out there that have businesses. So ultimately, how is your business doing? Is it okay? Are you attending to cash flows, to budgets, to forecasting what your numbers look like in the next 6 to 12 months? There is no time like the present where this becomes more important. What stimulus packages are available to you? Talk to your bank, talk to your landlords. Have you trimmed the fat with your business that doesn't necessarily need to be there? Look after your wealth. It's very, very important, especially as we head into next year. Again, what do you need to do to get yourself financially sorted? Very important. Speak to us now if we can assist, and build a network of experts around you to help you achieve your objectives. Great, an accountant, not a problem. How about a loan broker, financial planner, a solicitor, conveyancer, business mentors or coaches, property advocates? The list can go on. But look after yourself. Very, very important during today's times. You can use free technology, or you can use other technology that's out there. All of you in business know what your numbers are. Do you know what your numbers are? Do you know what the forecasts are? There's things like Xero software that can have that downloaded into your P&L report every day, every night. If you don't understand or know what your numbers are, how can you work on improving them? That is the most important thing there. If you always do what you've done, you'll always get the same result. You'll get what you've always gotten. So please work, please do what you need to. Now I'm just going to click on my screen here to see if there's questions that I can help. Was there a change to any of the superannuation contribution caps? Daniel asked that question. The short answer is no. Nothing was mentioned in the budget there. What else have we got here? I am a self-funded retiree with regular income from commercial rental property as an individual. I'm not sure what that question is asking, but John, there was nothing in the budget from that idea, but I'm happy to answer any questions to understand a little bit more specific if that helps. So thanks to those that asked questions. Now, just wary of time, so that's looks like almost hit it perfectly with the 60 minutes as I promised. What to do next? Some take-homes, and firstly, I'd just like to say thank you all for taking the time out of your day today to jump on and have a listen. Thank you for those that continually talk to us and support us as a small business. It's greatly appreciated, and certainly give us feedback to let us know where we can improve as well. What should you do? Talk to us for assistance, guys. I can't help if you don't ask, basically. My team always know the answer's no unless you ask, so please talk to us. Recommendation, the ATO have been a little bit quiet over the 6 months with COVID and everything like that going on. Make sure all your compliance is up to date, from tax returns to BASs to super payments, etc. If you don't, basically the ATO are going to take action. I'm sure they will. If it's not this year, it'll be next. They're starting to get very heavy with their penalties as well. And in summary, what do you need to do to get financially sorted? Try and define what that means to you, but we have the team and we have the ability to help guide you around your investments, around your taxes, around your loans and finance requirements as well. Like I said, what we will do, or there's my contact details, we will certainly follow up with an email to thank you for attending. We'll also let you know as soon as this presentation is uploaded to our website, along with the PDF slides, and then you'll be able to access them at your convenience if you'd like any further details or just to recap on anything. But from my perspective, thank you very much for joining me today. I appreciate it. If I can help at all, my contact details are listed, and please stay safe out there, and let's all together look forward to 2021. Thank you.